If you understand the real structure of the market, your trades will look like this and you will make life-changing amount of money from the trade. But a lot of you guys will take every trade from this liquidity, from this liquidity, from this liquidity, from this liquidity. This is not what is meant by liquidity. You guys are doing it very, very wrong way. If you do the trading like this way, taking trades from every liquidity, you will not make a single dollar from the trading. You will just waste your time constantly keeping on focusing on the wrong stuff and not doing what you need to do. In this video, I will exactly show you how to take the sniper entries like this, and I will give you the exact checklist what I use before taking these trades. So watch this video till the end to understand the real structure of the market. These are the total 3 important market structures that people use to understand the market direction. The first thing is SMC structure. These guys will wait for the change of characters and they will think the market always come and mitigate the order block and it will go. This stuff very rarely happens in the marketplace. That's why 99% of the people are unprofitable in the marketplace. This is completely false knowledge that you got from the Instagram gurus and YouTube gurus. If you have little bit experience in the chart view also, you can easily tell this stuff does not work. The market never moves like this. If the market is moving like this in an easy structural way and in a predictable way, everybody will be profitable. And why only 1% people are making money in this marketplace while 99% people are losing money? If the market moves in this structural way, everybody should be profitable, right? You should use just some sort of common sense while identifying these type of scammers teaching you there is a 99% win rate thing. There's nothing like that by this SMC structure. So this is a completely false narrative that you are learning from these Instagram gurus and YouTube gurus. And the second type of traders are liquidity traders. I know you guys, you have lot of knowledge about the liquidity concept. You studied ICT, you studied PTMM, and you studied many things, and you have lot of chart view using the liquidity concept. Still you are unprofitable in the markets because you are focusing on the wrong liquidities than focusing on the right sniper entry liquidities. Like you will think everything is the liquidity, every high and low is the liquidity. You will mark every 5 minutes like, every 15 minutes like, and think that is the liquidity and take random trades from there. And also you guys don't have entry pattern while taking the trades after the liquidity is taken out. You don't have a structural format while taking the trades. You will just take the trades randomly once the sweep is happening. So that's why you are getting chalked out at the 1 minute noise. You should need an exact entry pattern, and also you should not enter the trades from every liquidity at what liquidity you want. That is why your equity curve is looking like this. You are just breaking even though using the liquidity concepts. I know some guys who are trading this liquidity concepts from the past 2 to 3 years and never made a single amount of payouts from the prop firm just because they are just focusing on the wrong things. If you keep on practicing the wrong things over and over and again, you are just wasting your valuable time rather than making money. But even though some guys I met have 4 to 5 months of experience with the liquidity concepts and they are killing the prop firms every month over and over and over and again. This is because they are just focusing on the right things. If you see here, this is the real market structure. You should not identify the liquidity as a single high or single low. There are patterns that are collectively formed, that will collectively form like a range or a trend line. You should form the lines of the liquidity and identify the whole build up. This is where the huge amount of liquidity will be there. If you use the common sense, at which area the money will be more, at the single high or a stacked up highs? There will be lot of liquidity in these areas. So if the transaction is happening here and if you're entering here, there is a huge chance that you get a huge risk reward trade. This is why how we get the sniper entry trades, and this is the main reason why our equity curve will look like this. Yes, we will take losses, but our losses are very small when compared to your losses. If you see, your risk reward will be like 1:2 or 1:3, whereas our average risk reward is 1:10 and 1:20. We use the fixed risk reward ratios like 1:10 and 1:20. This is why our equity curve will look like smooth. Any strategy in the world works if it has good risk reward ratio and good win rate. Don't fall into the trap of finding the holy grail in trading. There is nothing holy grail in the trading. These Instagram gurus and YouTube gurus are fooling you by telling you there is a 99% win rate strategy. Even if you have 50% win rate strategy and you have a 5-hour system, you will make life-changing amount of money from the trading. It's very easy. I have did it and many of my students did it. You should have a proper checklist before entering the trade, and you should only use the checklist. If you keep on switching the strategies from one strategy to the one strategy, if you use SMC in one trade and liquidity in one don't trade, you will never make a single dollar from the trading. This is the easy hack you should follow. Just follow a system and understand where the clear liquidity is. Then you will take the sniper entries eventually with lot more win rate. Now let's go into the checklist which you should follow before entering the trades. This is the first thing you should identify while you are in the charts. You should identify where the liquidity is. Liquidity means it's not like every high and every low. It means where the accumulation is taking place, where the market makers are generating the liquidity using their ranges or trend lines. So this is the only first thing you should identify while coming into the charts. You don't need to sit in front of the computers all day long. You should just identify where the money is in the marketplace. After identifying the money in the marketplace, you just mark the build up high and build up low. So you are not guessing anything whether the high of the build up is taking out or low of the build up is taking out. You are just reacting to the marketplace. If the manipulation of the high is happening, you should sell. If the manipulation of the low is happening, you should buy. This is the simple things you are doing, and your win rate will be lot higher compared to the things you are doing right now, taking trades from every silly 15 minutes and 5 minutes liquidities and taking unnecessary losses. So let's coming to the checklist. You should always check news first. Always check news first. This is the main important thing, because if you are trading the FTMO or MFF or any funded accounts, this news will easily slip you out and you will fail your funding challenges, because I have seen lot of people who are failing the challenges in the time of news. If you are aggressive like me and you have a lot of amount of money sitting in your bank, you can be aggressive in the challenges and you can trade. But if you are just starting out, you should not trade the news. You should check the news. If there is a news, you should not take the trade. And also you should understand the higher time frame liquidity cycle. This is very important. You should understand the higher time frame direction, where the higher time frame is going to look. If the higher time frame is aligning, we take fixed like 20 RR trade, and if the higher time frame is not aligning with the intraday 15 minutes liquidity cycle, we just fix the target 10 RR. This is what we do. And also third thing, you should mark intraday liquidities that are very clear to your eyes, previous day's highs or lows internal liquidity. So these liquidity should be previous day's highs and Asian liquidity or previous day's internal liquidity. These type of build-ups, you should not take the build-up when it is the same day liquidity or the intraday liquidity. This is very important point. You should only consider this as the valid liquidity point if it is the previous day's liquidity. Simple. And also the fourth point of the checklist is you should wait for the speed and aggression taking the liquidity in the 15 minutes time frame, because a lot of retailers and the breakout traders will wait for the break of the structure and trade. They will have a lot of buy stops here. In this position, they have lot of buy limits, buy stops, lot of orders will be there. After the market reaching this level, their orders will get automatically executed. Lot of liquidity will be there. And also to induce more and more people who are waiting for the breakout with the strong momentum, that's why you can see a lot of momentum candles with huge imbalances taking out the liquidity. Lot of imbalance candles taking out the liquidity. These market makers will produce these type of candles to induce more and more traders. We have backtested the charts from 2008. Every time if the liquidity sweep is valid, there is a speed and aggression candles taking the liquidity. This is very important. Source guys, I am dropping all my source for free in this YouTube video. Make sure you like the video and subscribe the channel. Nowhere else you can find this stuff online from an Instagram guru or YouTube guru. And also the second point in the checklist, wait for the reaction candle once the candle sweeps the liquidity. Here in this position, you can use any entry pattern what you want. You can use the simple change of character, or you can use the 5-minute rejection candle. You can use any entry pattern, or you can use the IFVGs, or you can use the FVG entry pattern. Anything you can use, because these guys will tell you IFVGs is the new thing or the turtle soup is the new thing. The entry pattern is nothing. The narrative should be important. With the narrative, you will get the high win rate trades, not with the entry pattern. You can use any entry pattern, but you should stick to one entry pattern strictly. If you are changing the entry patterns, one trade you are taking the IFVG and another trade you are waiting for the change of character, you will be never be profitable in the marketplace. You should stick to the one entry pattern. Stick to one entry pattern and trade. Simple. If any money level near to the liquidity is there, you should use safe SL covering the money level. So for example, if any money levels means nothing but FVGs or order blocks, if any, or breaker blocks, if any breaker block or FVG or order blocks are there very near to the liquidity, you will use the safe SL, because by using the SL placement correctly, you can increase your win rate. Lot of people will think you should just use the sniper stop loss and aim for the 10 RRs. No, we use the safest SL and still hit the 10 RRs and 20 RRs consistently every month. This is because we understand the win rate is also very important thing. in trading. The win rate and RR is the golden formula to make insane money in the marketplace. So when the money level is there, we will use big SL. When the money level is not there, we will use the tightest SL, and we will hit the 10 RRs in a single day. This is how we will trade, because we understand we have a lot of data backing with my strategy. I have collected last 4 years of data with my strategy and saved it in a Notion database. Every day before I trade, I check all the Notion database of my data, and I will get a lot of confidence while executing the trades. Same my students will do before coming into the session, whether it may be the London session or New York session. This is very, very important to get confidence. And also enter there and target the appropriate levels according to the HT fee. So if the higher time frame is aligning, we target fix at 20 RR. If the higher time frame is going opposite to the intraday liquidity levels, we will just do 10 RR. Do not use Asian liquidity feeds very, very near to the previous liquidities. What does it mean is, let's say this is the Asian liquidity, the small high is the Asian liquidity. Some people will take the trades directly from here. They don't know the higher picture. Higher picture is telling this is whole build up, but they will take the trades from this small liquidity here. This is why you guys are taking lots of losses and you're just breaking even though you are trading the liquidity concept from the past 3 years and wasting your lifetime completely. If you keep on doing like this, you will just end up in the same situation that you are currently right now, making no progress and making no money. I have seen some students who came to my mentorship and they are starting seeing some good amount of results in the 5 months. It's because what you practice is what you become. If you keep on practicing the wrong things in trading, you will just keep on becoming the wrong trader. If you keep on getting the right information from the right people, your progress will be insane and faster. You don't need to spend lots of amount of money on failing challenges and everything. And also close the trade when the high impact news and price near to the entry level. Simple. If there is any high impact news in between the trade, you just close the trade 5 minutes before the high impact news. So this is the exact checklist you should follow. I gave everything for free, guys. I gave everything for the free. Even 1% of the people who are watching the video use this checklist and follow the risk management and follow the psychology, you can change your life, guys. You will just text me, thank you so much, liquidity inducement theorem, you have changed my life completely. You can easily pass the challenges with one trade. You can easily hit 8% target and pass your challenges. You have got the sauce, guys. You have no reason to waste your time again. Just go and back test the stuff that I have just shown you. If you are still having any doubts, just watch the video over and over and again. This is completely for free. If you have any doubt regarding this strategy, just comment down the video and I will respond to every other person. I'm not like any Instagram guru who is using a VA who will reply to the comments. I will reply to the comments using and explain all your doubts. So make sure you like the video and subscribe the video. Peace, guys.